This is InvestTalk. Independent thinking, shared success. Justin Klein and Steve Peasley stand ready to take your finance and investment questions and share their unbiased answers. InvestTalk is made possible by KPP Financial, a registered investment advisor firm serving clients throughout the United States. The clarity for your path forward starts now. Here is KPP Financial President, Financial Advisor, Steve Peasley.
Good afternoon, everybody, and welcome to InvestTalk. It is Tuesday, September 6th, 2022. And, of course, yesterday was Labor Day, and that means summer is just about done, right? We're going to have to say goodbye to summer. So we're going to be moving into the fall season, even though here in Southern California, this is the hottest week, and last week and this week is the hottest 2 weeks we've had all summer, by far. We're getting a tropical storm coming up the coast of Baja, and it's bringing with it humidity. I don't mind the humidity as long as it brings some rain. So far it hasn't done so. No rain, just hot and humid. I don't like that at all. But that's what it is about here. You got to pay attention to your money, everybody. We're moving to fall, from summer to fall. We've already moved from an easing money situation by the Fed to a tightening money situation for this year. So things are changing. Things are different. So your investment's going to react differently. And you just got to be ready for it. You got to adjust for it. The phone number to reach me is always the same, 24 hours a day, 7 days a week, 888-99-CHART. You know this is a call-in show. You can call in with any financial questions you have. And, of course, I've got a lot of material to discuss with you today, as I usually do, and Justin usually does. My focus point today concerns the story behind U.S. worker productivity, which is showing the largest ever annual drop in the second quarter. Largest ever annual drop. Ever. We are in a weird economic situation. We really are. In one sense we can call it a recession. In another sense people don't want to call it a recession. Well, it's a weird situation. That's all I can tell you. So productivity fell 4.6% annualized, the steepest since 1948, by the way. Time permitting, I'm also going to talk about VW, which is spinning off into a separate IPO, Porsche, or Porsche, however you want to say it. And also, maybe if we can get to, I want to talk about Bitcoin going, is it going to capitulate? And why do I say that? Well, we'll discuss that. Hopefully we can get to it. And we need more lithium, everybody. We need more lithium. Lots more. And we're going to be short lithium at the pace we're going with the electric vehicle industry and the government, federal government, and, of course, California government, all pushing very hard to move toward electric cars. I don't have a problem moving to electric cars. We just don't have the ability even to produce the lithium for the batteries. And we'll talk about it. We'll get more involved in that. So those are the main focus points I want to talk about, time permitting, of course. And we do have some calls, voice bank calls, questions. Someone wants to talk about Berkshire Hathaway. Another person wants to talk about innovative industrial properties, and we'll get to those, I'm sure. My trivia question today is about Costco. With 120 million members, you'll be surprised at how much an IPO stock investment is worth today. That's coming up at the halfway point of the podcast. So I've got all this planned for this episode of the podcast, and of course, all that unplanned stuff with your live calls. 888-99-CHART. So the market didn't do very well ever since the Federal Reserve, and they had the Jackson Hole Conference. Ever since the Federal Reserve said we're going to be raising rates more than you think, the market has turned down. So that's what we're dealing. The Dow is down 173, the Nasdaq down 86, and the S&P down 16. So we're just going to have to live with it. Just going to have to. Okay, so that was what the market was like today. So everything's planned out. What do you want to talk about? Let's go ahead and get to our first caller question.
Hey, is Berkshire Class B a good long-term investment? Ticker symbol is BRKB. Thank you so much.
Well, Berkshire Hathaway, which is Warren Buffett's company, it's like a mutual fund. It's not even, it's an individual stock, but it holds a number of companies inside of it. So it acts like a mutual fund, and I would have to say, yeah, it has been very good over the years. There are years it doesn't perform, just like every other mutual fund. There are those years. So, but if you're talking about a good long-term investment, Berkshire Hathaway, yeah, it's hard to say no. My biggest concern is the age of Warren Buffett. He's in his 80s, mid-80s, late 80s, and he's still the CEO, is still very much a part, and he really hasn't designated clearly who's the heir apparent, who's going to take over from him when he can't do it anymore, when he dies. And so there's going to be some turmoil when that happens. But as a long-term investment, yeah, it's got really good companies. It's a value-oriented stock, which holds value-oriented stocks inside it. So, yeah. We're headed into a break, unfortunately, everybody. I welcome your finance and investment questions. You can do it right now. No questions too simple or too complex. You set the agenda. It's all about financial stuff. So call InvestTalk, 888-99-CHART.
Why do listener questions make InvestTalk better?
Which of these would you recommend?
Because each caller presents fresh questions in their voice.
I was curious if you still think aluminum has a ways to go from here.
When do I know the right time to take profits?
Should I be looking for an exit? Should I be holding here?
And listeners instinctively realize that InvestTalk uniquely offers a welcome dose of investing satisfaction.
I think you have a terrific show, and I've learned a whole lot.
Hey guys, love your show. I've been listening for several years now, and I've learned a lot.
Justin Klein and Steve Peasley understand what investors need and want.
I would look at it from a tax perspective. If there's no tax implications, move on, find better ways to use that money.
I'm going with the odds. I think a half position now would at least get you in it and get you watching it so you won't lose track of it.
Don't forget to call InvestTalk, 888-99-CHART. InvestTalk is made possible by KPP Financial, where InvestTalk hosts and KPP principals Steve Peasley and Justin Klein practice parallel investing. That means Steve and Justin's accounts participate with client investments at equal prices and percentages. You can learn more about parallel investing at investtalk.com. The phone lines are open. Steve and Justin welcome your questions. Call now, 888-99-CHART.
Hi, guys. This is Kent, Arlington, Texas, calling you about Comcast. I'm looking at it in this time where things are really getting down low. It's dropped with everybody else, but it looks to me like the numbers are pretty good. Their cash flow's $6 a share, and they're paying out a little over $1 or so in dividends. It looks to me like 10 to 12% growth in earnings. I know the earnings yield is around 10, and most of the numbers look pretty good, but I've heard more podcasts than one that Comcast has got the worst customer service of any company around, and along with AT&T, and so I'm wondering what y'all's thoughts are on Comcast. All right, thank you very much. Bye-bye.
Okay, Comcast Corporation, symbol CMCSA, provides video, internet, phone, network, broadcast TV services through Comcast cable. I would just say that a lot of cable companies don't have the best service. I have Cox out here, and I'm not very happy with them. So I just don't know. I don't know of any cable service that everybody's happy with. I just don't know why. Just don't. Anyways, looking at the numbers, I'm going to have to agree with you. Their numbers look pretty good. It's a $34.74 stock. They're going to make $3.57 this year and $3.85 next year, and that's about 8 to 10% growth year over year. Sales growth is happening. It's around, I would say 10% also. So those are good things. It's a big company, $155 billion, paying 3.1%. Okay, so 3.1% of $34 is only like $1, and they're going to make $3.85. So their payout ratio is pretty darn low. Cash flow is closer to $6. So all the things you said are right. Okay, now it's fallen from $60 in September of 2021 to $34, almost in half. And it looks like it's getting very close to long-term support in the low 30s. So it's still falling, though. I think it's a bit early yet. You want to see some strength coming into this stock, and I'd like to see it break above 40. That would give me more comfort because every time it's gotten close to the, I think it's the 50-day moving average, it's bounced off of it down. Tries to come up to it, bounces below it. Come up to it, bounces below it. So that's disconcerting. I like to see some strength come into it, and I think I'd be pretty patient at this point. But it is a good, solid company. There's no doubt of that. My focus point concerns the story behind the headlines. U.S. worker productivity shows largest ever annual drop in the second quarter. Largest ever. And by the numbers, productivity fell 4.6% annualized rate, and that's the steepest since 1948, while growth in unit labor costs is accelerating. What does that tell you? Low productivity, worse productivity, and unit labor costs, or the cost of workers, going up. That's inflation, okay? Remember we talked about it, everybody was worried about the inflation of goods and services, and it's 10%, oh my goodness, it's really out of hand. And I remember mentioning it numerous times, we got to watch the wage side. No one was talking about that very much. Well, now we're seeing it take off. The wage side is taking off because when productivity goes down, that means costs, unit labor costs, are moving up. You got salaries moving up, and you're getting less work out of each employee you hire. That is a bad situation. We were once known, we meaning the United States, were known for productivity. Not now. And what happens is, even though wages are going up, low productivity means reduced standards of living. Wages still will have to keep going up to keep up. And that's it seems like we're in a cycle to me of wages and salaries and products going up and more wages to make up for it. And, it's a cycle. And this is one of the reasons why I bet you the Fed saw these numbers before their most recent meeting and their discussions about how they need to pump up interest rates. The Fed, I don't think you should fight the Fed. They want to slow the economy, and to do that means to push us deeper into recession. That's what that means. They want to kill inflation. Inflation's on the sales and goods and service sides is killed by lack of demand. Well, there's what, 11 million jobs out there? There's not going to be any reduction of demand. And at the same time, we have a labor shortage in many different fields. It is the weirdest situation. Another thing is, it's very difficult to count productivity, to figure out what it is, because people work from home and do that. Ever since COVID, everything's accelerated from, people moving to homework and work from home as opposed to working in the office, which you can measure easier when you're in the office. I think that has something to do with it. I haven't seen any studies of that other than saying people are more productive when they work from home. Well, I don't know. We're just in an odd situation, and I don't think it's going to change. I think this is the new reality. Just the new reality. I don't. Not for a while. we have to go into a deep recession, and I'm really concerned that the Fed might do that. I hope they don't. Of course, they say they're not going to, that they can, guide this, and frankly, I don't believe it. I don't believe it. We're heading into a break. I welcome your financial investment questions, and you can do it right now. No questions are too simple, as we said, or too difficult. I want to talk to you. Be fun to talk to you. The number's always the same, 888-99-CHART.
You are listening to InvestTalk. We've seen the markets go up, then down, sideways, and around. It's called volatility. And if you're a serious investor, you'll have finance and investment questions for Steve Peasley. He's here now taking your calls live. InvestTalk, 888-99-CHART.
Hello, Stephen, Justin. I'm Paulo from Germany, by the way. I have a question about innovative industrial properties. I'm a long-term holder, and I kept buying the stock, but now I'm like 25% down, which is not a problem for me since I'm a long-term holder and I'm holding this because of the dividend, and I think it's safe. Do you think the price of the stock is going to go down further, or is it time to pick it up at this level here around 86, 87 or something? So, yeah, I'd like to hear your opinion on the show. I love the podcast, and have a wonderful day. Thank you. Bye.
Okay, this is a REIT, Real Estate Investment Trust, targets acquisition of industrial real estate assets that are used for growing medical use cannabis. We've talked about this numerous times. Innovative Industrial Properties, IIPR. The numbers are very good. They're growing their numbers pretty significantly, $8.30 a share this year. That's 24% higher than last year. And then another 9% next year to $9.05. It's an $88 stock. So it's going to be well under 10, and the 5-year range is 11 to 73. But it is a growth stock, and growth stocks are not in favor right now. So you're bucking the demand out there, which is for value stocks versus growth. So that's okay. It's a very solid company. It looks like, and if I remember right, didn't they have one of their, I just don't know if this is it. Was it one of their leases, rather large lease, the underlying company that was paying them rent was in trouble, and that helped push the stock down. I'm trying to remember, and I'm not sure if I remember that correctly, so don't quote me on that. But it's growing sales 40, 50% a quarter. So it's doing very well. You'll be fine if you have a long-term outlook. The dividend is 7.9%, so almost 8%. Well, 8% of $88 stock, right, is $6, $7, and it makes $9 next year. So it's pretty high payout ratio, but it's doable. I just don't know if it can keep that up forever. I don't know. VW is going to spin off Porsche. VW is the world's largest auto company, and they own Porsche. They're going to spin it off in an IPO, initial public offering. They have announced it just earlier this week, last week, I don't know, just recently. And they plan the IPO, and this will be one of the largest ever IPO. They plan it in late September. We're in September. But they also made a little caveat there. It depends if there's enough interest in the IPO. It's a pretty tough environment for an IPO when you're in a bear market. IPOs are harder to get out there and get a fair price for them and get a high price. So they may reconsider, but I think, I don't think VW needs the money. And I don't know how much they're going to retain of the IPO ownership of the shares of Porsche when they do spin it off. I'm sure they'll retain a big chunk. But, if you're interested in owning Porsche, you might get an opportunity to do so. Remember, the good thing about this is Porsche's been around a long time. You can, they break out the earnings per division, so you'll know separately what Porsche's profit margins are and sales and all the numbers you need to know. So it's not like an IPO where you don't have history. You do have lots of history, which will help decide whether it's worth it or not to buy. So I like Porsche myself. I think they're coming out with one of the world's most expensive electric cars. It's over $1 million. Was it the Talon or something? I think if anybody knows what the name, TALON, was that it? The name of their new electric car they're coming is $1 million and up. Okie dokie. That's a lot of money. 888-99-CHART, 888-992-4278. The market didn't do very good this week. It hasn't done very good in the last couple of weeks. We did have a nice little run up. It topped in June. And then, at the very end, beginning of July, it started to not act very well. I think that's when it topped out. I'll take a look at the chart. Let's take a look real quick. I think that's when it was. Let's see. It topped right in August. It topped. There was a bump up in June, and then it fell, then topped up in August, and now it's fallen down off of it again. Okay, my trivia question. The original Costco location was opened in Seattle, Washington, in September of 1983. Today, Costco, symbol COST, is a worldwide retail giant. So as we go to break, here's my two-part trivia questions. What percentage of Americans shop at Costco? And if you had invested $1,000 at the adjusted IPO price and retained all shares, how much would that be worth? $1,000 be worth today? I'll supply the answer right after the break. My InvestTalk phone lines are open, 888-99-CHART.
If you don't know the numbers, you don't know your business. That's true when your business is growing fast, and even more true when there's a lot of uncertainty. Inflation is running rampant, supply chains are clogged, and labor market is tight. What does that mean for margins? But not every business is in the dark, and NetSuite is helping business owners everywhere. Over 31,000 businesses know their numbers because they use NetSuite by Oracle, the #1 cloud financial system. NetSuite gives you visibility and control of your financials, planning, budgeting, and of course, inventory. So you can manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. In 2022, profit is the new growth. So NetSuite helps you identify rising costs, automate your manual business processes, and see where to save money. Know your numbers, know your business, and get to know how NetSuite can be the source of truth for your entire company. Right now, NetSuite is offering a one-of-a-kind flexible financing program. Head to netsuite.com/investtalk right now. netsuite.com/investtalk. netsuite.com/investtalk. Take a guess. How many job seekers do you think visit LinkedIn every week? The answer is 40 million. As anyone who has ever had to search for excellent job candidates can tell you, finding the right job seeker can be a daunting task. That's why you will appreciate the power of LinkedIn. Create a free job post in minutes on LinkedIn Jobs to reach your network and beyond, to the world's largest professional network of over 810 million people. Then, add your job and the purple #hiring frame to your LinkedIn profile to spread the word that you're hiring so your network can help you find the right people to hire. Simple tools like screening questions make it easy to focus on candidates with just the right skills and experience so you can quickly prioritize who you'd like to interview and hire. It's why small businesses rate LinkedIn Jobs #1 in delivering quality hires versus leading competitors. LinkedIn Jobs helps you find the candidates you want to talk to faster. Did you know every week nearly 40 million job seekers visit LinkedIn? Post your job for free at linkedin.com/invest. That's linkedin.com/invest to post your job for free. Terms and conditions apply.
InvestTalk is here to help. And when you download the free InvestTalk podcasts, don't forget to rate and review. The phone lines are open, 888-99-CHART.
Okay, before the break, I had a trivia question. What percentage of Americans shop at Costco? And if you invest $1,000 at the adjusted IPO price and retain all shares, how much would that be worth today? Okay. Membership-only warehouse giant Costco was founded in 1983, and it went public just a couple of years later. IPO price was $10 per share. Okay, December 1st, 1985. Costco, C-O-S-T. And at the time its IPO, the company was valued at about $1.27 billion. Now, Costco, give you some current information, Costco has 120 million members worldwide. It's the third largest retailer behind Walmart and Amazon, and 37% of Americans shop at Costco. 37%. Their average customer spending, $144 per shopping trip, and they buy 9 items on average. Pretty interesting, huh? Okay, just to give you an idea how much that money that when you IPO, Costco split 4 times. It has split 4 different times since the IPO. So if you bought at the IPO price, your cost per share is now $1.67. Okay, so if you had $1,000 at the time, you would have gotten approximately 599 shares. Now, at Costco's August 1st, 2022 closing price, that would have given you $318,000. Spent $1,000, got $318,000. If you would have put $10,000 in, you'd be a multimillionaire. $3.1 million today. Now you know why I tell you stay invested. You know, it's fundamentally strong companies. You don't need to trade them if they just stay with them. Stay with them. It's if they don't have the fundamentals that then you might want to do something. But excess trading does not help you. Does not help you. Okay, let's pivot back to an InvestTalk voice bank question again. 888-99-CHART.
Hello, InvestTalk. Mike from Texas. Calling about Huntsman, ticker HUN. They have a low PE, good price to sales, good return on equity, low debt to equity, enterprise value to EBITDA is about 3.74, good return on invested capital, price to book just over 1, and payout ratio is around 15%, so the dividend appears safe. What are your overall thoughts on adding Huntsman to hold for the next 5 to 10 years in my portfolio? Thank you for your honest and unbiased feedback.
Well, Huntsman's out of Texas, Woodlands, Texas. Manufactures polyurethane material, textile effects, performance products, and pigments, and it operates globally. It's a $5.5 billion company, $5.5 billion. It's made money, and it's grown its money pretty steadily over the years. It made $3.54 in 2021. It's going to make $4.34 this year. It's going to make $4.18 go down next year. It's an economically sensitive company, so in a slowing economy, this stock will get hurt. So it does pay a 3.2% dividend. Earnings are very solid. They don't have very much debt. Management owns 7%. There's a lot of good things. The stock is $26. It's going to make $4.18 next year. Okay, so it's very inexpensive. It's a good value, 20% return equity. It's got all those good numbers and everything. It's just that it's the wrong time of the cycle to buy this company. Now, if you wanted to buy at this price, I have no problem. It's a good, solid company, but you're going to have to go through the cycle, the recession. Okay, and then it'll come back. Now, to give you an idea, at the bottom of the last recession, which was the COVID recession, this stock went to $12, $13 a share. So don't think it can't go back down there. It can. I think most likely it would go maybe to the low to 20s, maybe the high teens. And I would rather you pick it up there. But it's a good value. It really is. Let's go to Sammy in San Francisco. How you doing, Sammy?
Yeah, thanks, Steve, for taking my call.
Thank you.
I wanted to ask you your opinion on a good entry point for Intuit, INTU.
Okay, Intuit is another growth company. Just a reminder, Sammy, where value companies are working much better than growth, and growth is the difficult sector these days. But let's take a look at Intuit. It's a big company, $118 billion, provides business, financial, and tax software and services to companies, accountants, and consumers. So that's a business that is not cyclical, really. It's kind of anti-cycle because you always need that business. Might be a little bit sensitive to the economic cycle, but not much. It's a $418 stock. They're going to make $15.94 a share. So it's not inexpensive. It's kind of on the expensive side. The most recent quarter, sales shrank 6%. Before that, they were growing 35%, 70%, 52%. But the most recent one, it shrank 6%. That tells me that this is a very risky time to be buying it because, it's got some weakness. Now, I think it's going to hold above about 350. It's at 418. If it gets around 350, 360, I think that's a much better entry point there. And I think I might wait for that to come because it's not an inexpensive stock. I just don't think you have to be in a hurry to buy this one. Sammy, appreciate the call. Thank you. Intuit. INTU is the symbol. Okay, Bitcoin. If you've been paying attention, you know that Bitcoin dropped below $20,000 just yesterday. This was holiday. And it's been hanging around $25,000 for a while. Why am I bringing this up? Because I think it might have a capitulation event because it broke below pretty strong support, meaning that it could fall sharply and that will and flush a lot of weak hands out, and that would probably be the bottom for Bitcoin. Where that bottom is, I don't know. I can't tell you. But I do not think you want to be buying it right now if you're in the market to be in cryptocurrency. Now, there's so many cryptocurrencies out there that I would stick with the big ones, like Bitcoin, because the vast majority of these cryptocurrencies are going to go out of business. They're not going to be around. Just not going to be around. And we're going to be left with a handful of big guys at some point. And so I would stick with the ones that have staying power, and Bitcoin does. But it's going to be volatile. Well, if you've been paying attention at all, it's extremely volatile. Just expect that to continue. Not going to change. And you have to decide, because there's no way to evaluate the company. There really isn't. So you're going to have to decide where you want to buy it. And the best way to decide is using a chart. And the chart's saying that it could collapse because it's right at that point where it might collapse, and I would be patient. We roll into the hottest summer days, in Southern California. It is hot and it's humid, and it usually doesn't get humid, but we have a tropical storm coming up from Baja. I'm okay with it as long as it brings moisture, rain, not moisture, just humidity, but rain. I want rain. I think we had a 50% chance this weekend. I hope it rains. We need the rain. Okay, even though it's hot, the market, it's still volatile. The market's not nearly as hot as it used to be, but it's volatile. And it's going to continue to be, as long as the Fed stays on its path, its war path against inflation, it's going to be volatile. So maybe it's worth a minute or two to take time to talk about what we can do. Steve Peasley, that's me, and Justin Klein, we own KPP Financial. We would love for you to give us an opportunity to help you look at your portfolio, maybe tell you what kind of risk you're taking and whether or not that risk matches your overall desire for risk. How much risk do you want to take? Do you know how to figure that out? Well, we do. We can help you with that, and we'll take a look at it. There's no obligation. We don't talk people into anything. There's no pressure on our side. We'll just take a look at it. If you want to know what we can do for you, we'll be happy to explain. But you don't have to. You can call us, send us an email, go to investtalk.com. Just click on the Contact Us button. There's different ways to get a hold of us, many ways. We would love to talk to you. Take a look at your portfolio. Have 10 minutes with you. I think you'll notice the difference when you do, because we don't pressure people. We really don't. So we really do want to help any way we can. Okay, so let's swing back to an InvestTalk voice bank question that came in earlier on our anytime listener line number, 888-99-CHART.
Hi there. I have a question about Advanced Micro Device, AMD. I have a very small position, but I was thinking of selling that, and I'd like to get your thoughts on that. Thanks very much. Bye.
Okay, Advanced Micro Devices. Remember, everybody, everybody's been calling me today. Every call seems to be, or most of the calls seems to be, on growth stocks, and that's Advanced Micro Devices. Designs microprocessors embedded in media graphics and processors and chipsets for computers and consumer devices. Growth stocks are not in favor. That's why they've been beaten up. Even though AMD has not done that bad. I mean, its high was, 150 or so, and today it's 78. So it got hit pretty hard, but I've seen worse, much worse. They are still growing sales 70% twice in the last 2 quarters, 70% a quarter. So they're still growing. The stock is $78, and they're going to make $4.83. So that gives you, a PE of 19, 20, which is their low, by the way. Return on equity is very high, 52%. So for AMD, the price is pretty reasonable. But I think you have to realize we're in a new paradigm here as far as valuations, and I think growth stocks are ratcheting down their values, even though they still may have growth. Remember, the S&P 500 long-term average is 15 PE, and this one's at 1920. Even though it's a growth stock, everybody's going to say, "Well, yeah, but it's growing so high, it should have a higher PE." Well, generally, yeah, but we're in a economic. I call it a recession because 2 quarters in a row shrinkage is a quote-unquote definition of recession. And we're in a point where the Fed's trying to raise rates, trying to slow the economy. So your growth stocks are the ones that are going to get beat up the most. So I think it will fall. I don't know how deep, but I think it will. So it depends on what you have, but I wouldn't hurt my feelings if you sold out. Got out. Okay, let's make it 2 callers with questions in a row. 888-99-CHART.
Hi, this is Matt from South Florida. Wanted to talk about being able to access the private credit markets. Listened to several different shows, and a lot of managers of funds for high net worth investors seem to be indicating that the ability to access the private credit markets over the next 9 or 10 months will be one of the few ways to make money. So for an average investor trying to think about an ETF that would give me access to the private credit markets, these tend to have pretty good dividend yields. That's not why I'm interested. Just want to get your take on 2 ETFs. One is VPC, Victor Paul Cat, and the other is BIZD, Boy, Indigo, Zebra, Dog. Wanted to see if either of these for a hold over the next 8 to 10 months when things are looking pretty bleak would be a good idea. Thank you.
Okay, VPC, Virtus Private strategy. ETF seeking daily results of the inverse of the performance of the index of private credit index. So this is, you're betting against it on this one. It's an inverse fund. So that's just the opposite of what you're trying to get. So BIZD is the VanEck BDC income ETF, exchange traded fund seeking performance for market vectors for U.S. business development. So this is a business development ETF. In other words, probably more fits what you're doing. We had to look deeper into it to see what they actually are investing in. But you're going to buy this for the dividend, and you said you weren't interested in the dividend, 9.5%, because this doesn't move up or down very much. It's just kind of sideways. So I don't know if either one of these. I know the inverse one is not fitting what you say you're looking for, and this one may. But I think I'd keep looking. I'm not sure that the private sector debt market is a good thing to get into at the beginning of a recession. That does not make me feel comfortable. And hardly any mutual funds own this thing. There's hardly any trading volume. I'd keep looking. Keep looking. Okay, not these. 888-99-CHART, 888-992-4278. We're going to talk about lithium before the end of the show, everybody. Lithium. And the problems we're having with lithium. We don't have any problems right this minute. We're not. But I got a big but there. This is InvestTalk. I'm Steve Peasley, and we have one goal here, to help you achieve financial freedom. That's what we want, financial freedom. And, of course, we're going to continue to work toward that goal right after this break. So give me your questions, 888-99-CHART.
Now is a good time to call InvestTalk.
I had a question about the stock LRLC.
What's your question? 888-99-CHART.
No two portfolios are alike, and every investor has a unique set of circumstances. The best way to get answers that correspond with your situation is for you to submit your questions to Steve Peasley and Justin Klein. The 24-hour listener line never closes, so don't forget to call InvestTalk. 888-99-CHART.
Hey, my name is James. Just actually started listening to the program and impressed so far and happy with it so far. Just had a question about what to purchase at the moment and not wanting to invest in technology or any of those things. Is now a good time to buy commodities, or should a person wait for a while, give a little breathing room and see if commodity prices come down and then purchase at that point? Thanks. Bye.
Well, that's a good question, and I have probably a duplicitous answer. How's that? I would say yes and no. There are commodity positions that are fairly priced, and I would definitely consider them, but I do think we may have another leg down, which will make them cheaper. I agree with your assessment about staying away from growth stocks. I do, and I've been saying that for all this year and into last year. But value commodities, value stocks seems to be the play for the next year or two or three or even longer, and I would look for opportunities in that area. And you will get the opportunities, and there's some right now. Okay, so not a lot, but there's some. Okay, we need more lithium. If we are going to press, if the government's going to press, the state government in California, the federal government are going to press the EV market, electric vehicle market, for us, because Biden wants 50% of all, by 2030, 50% of all vehicles be EV, electric vehicles. In California, by 2035, 100%. So 50% sold, new cars sold by the federal government wants 50% of new cars sold be electric vehicles. In California, 100% of new vehicles by 2035. That means batteries. That means we need lithium. We don't have enough mining capacity. We don't have enough mining capacity on the drawing board to have enough lithium to supply these cars. Okay, so the Inflation Reduction Act is given big tax credits to buy electric vehicles. Okay, that's fine. Even though that's very misnamed, Inflation Reduction Act. That's ridiculous. As far as the name, it's not going to reduce inflation. It's going to cause more inflation. They're spending money. I mean, okay, that's a whole other issue. But the electric vehicles have parts and components, and also in this act that require lithium. But also in this act, it requires that from the federal level to be domestically produced, which I like, right? We want it to be produced in our country, but we don't have the capacity. So it's going to be an issue, and I don't know how that cannot stay an issue. This is in addition to, for how are we going to generate that much electricity, right? I mean, that's a separate issue. I'm talking about just building the vehicles because we need lithium in the batteries for those vehicles. Okay, can we build that many batteries? Okay, let's say we can. Do we have the lithium to supply to build that batteries? And then at this point, we will run out. We have plenty right this minute, but as we ramp up, we're not ramping up fast enough the mining for lithium. Now, can it be done? Of course it can be done. It can be done. We're just not doing it yet. Can we supply enough electricity to charge the cars? Of course we can. But we don't have enough power plants on the drawing board that we're trying to put together. You can't just snap your fingers and then you get more electricity. That doesn't work that way, right? It just doesn't. So we got to, and why am I bringing this up? For you investors out there, is there an opportunity in the lithium battery, lithium supplies area? Might be. I'm Steve Peasley, and this completes another InvestTalk program. Justin Klein and I thank you for listening, and we will encourage you to tell your friends and family members about our free download podcast. You can get your download anytime at iTunes, Google Play, and Spotify. And if you download it from iTunes, please rate us. We would love a rating. Okay? Of course, we want a great rating, but, you get to do that on your own. So, but please, it helps our public profile, okay? Independent thinking, shared success. This is InvestTalk. Have a great night, everybody.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial. Thank you for listening, and your comments and questions are welcome on our 24-hour listener line at 888-99-CHART.